So now we are going to discuss the topic ledger. Now, what is ledger? Ledger is the book of final entry, where journal is a book of original entry. So what do? We record the transaction first in the book of journal, right? फर्स्ट जब भी कोई ट्रांजेक्शन होता है उसको कहाँ रिकॉर्ड किया जाता है जर्नल में बट जर्नल इज बिट क्लमजी no doubt journal is a primary record book of original entry and it is very important but it is not that effective in taking decisions like imagine that we are dealing on a regular basis. Okay, I purchase goods from you let's say you are selling goods to me. I'm periodically making payments, right? And then again I purchase, I make some payment, again I purchase, I make some payment, again I made some payment, I purchase. So now this is not happening on a daily basis, or even if it's happening on daily basis. Now at the end of the month, or let's say after 2 months, I come to your shop and I tell you that I want to settle my dues. How much do I owe you? It is very difficult to track it from journal because on a daily basis, let's say you might be having some 30, 40 journals, maybe more than that. Okay. And every day you have to go through that whether Sunil's account is here or not. And there are chances that you may omit some of the entries. Whether you have sold goods to me or I have made payment to you. So for the purpose of analyzing all this stuff, we prepare one more book called Ledger. Now, ledger is one book where first page we prepare index. Whatever account we prepare, we write the name. Let's say first capital, page number 1. We leave estimated space. Let's say for capital, 2 pages are enough. So 1 and 2. Then let us say cash account, page number 3. Now for cash account, let's say we are leaving some up to 20 pages. Bank from page number 21. Purchase from page number 30. Sales page number 40, like that. Okay, so we are leaving some number of pages for the recording all the transaction. And then whatever journals we have done, that we post into ledger. So mind well, recording journal entries into ledger is known as posting. The entire process of recording journal is journalizing. The entire process of recording journal is journalizing, and the process of recording those journal into ledger is posting. Now, is it compulsory to do posting on a daily basis or immediately? No. Posting is a delayed process. You can do it as per your convenience. Maybe let's say once in a week. Okay. Some traders I know that who they post the journal entries into ledger on a weekly basis. On Sunday, their work is fixed, right? Morning, 1 or 2 hours they give for posting. Some businessmen where the transactions are very less, they opt for what? Monthly posting. Correct? You can do it at the end, but the more early you do it, it is beneficial and better for your business, right? Now, how do we do that posting? Okay, so for that posting, I'll take example of let's say one journal. So for the purpose of example, I'll write here cash account debit to capital account. Let us say amount rupees 10,000. Okay, and this is on let's say 1/1/2024, right? We take some random date. Okay, so on 1/1/2024 this transaction happened. Cash account debit to capital. Date column, particular column, here the LF column, debit rupees, credit rupees. Now this entry I want to post in ledger. Now how the ledger looks like? So the format of ledger is something like this. It is divided into 2 parts. Okay, and each part, this one is debit part, has 4 columns, and credit part also has 4 columns. Okay, debit and credit has four columns. So technically ledger is having 8 columns. Ledger is having 8 columns. Okay, what are the name of this columns or headings of this column? First column here is a date column. Second one is a particular column. This is JF column. This is rupee column. Same 4 columns: date, particular, JF, and rupees. Okay. Now, for the purpose of, let us say, understanding, I prepare 2 accounts here. Okay. One is my cash account, and one is a capital account. Okay. Okay. How do we post any journal entry? So first of all, we identify the journal entry. This is the entry. In that, which all accounts are involved? 2 accounts are involved here, cash and capital. Okay. So first we go to cash account. Cash account is what? Debit. Okay. So we'll select this debit side. This is credit. This is credit. This is debit. Debit side will select date. Now here, which date we write? Always remember, here we write date of transaction, not the date of posting. We record date of transaction. Okay, let us assume this entry you are posting on 7th January. Still, here you will record what? 1st January. If you are posting this on 17th of January, still I will record what? 1st January, because the date of transaction we record. Okay, so here we write 1/1/24. Cash account, yes, date. Debit by how much? 10,000. Okay. JF, we write the page number of journal. So if someone is recording, someone is referring this ledger, then they can directly come to know that in which page number this entry is. So assume this page number 1. Okay, this is happening on the first day, page number 1. Okay, here in particular column, now always remember, when we are posting in ledger, something we have to write on particular column. In particular column, we record the reference of other account which is debited or credited. Reference of other account which are being debited or credited. Now here in this entry, in cash account, which other account is credited? Capital. So I write capital. Okay. Now remember, here we add in debit 2, and while we are posting on credit, we write by. So this is going to capital account, and in capital account it is coming from cash account. Page number 1, 10,000 rupees, and date 1/1/24. This is how we record it. Okay. Now the question arises here that if we continuously do it, what importance this ledger we have? See, in ledger, and now once this is done, imagine the cash account is at page number 21. Capital account is page number 1. So I write here 21 and 1. So the moment you record the numbers in JF column, it is again indirectly one conclusive evidence that these entries are posted in your ledger. Okay, now we continuously do it this, and at the end we balance it. Now balancing of ledger, you need to be very careful. Okay, first of all, where we balance it? The side which is shorter. Now here if we check, here this is the side which is shorter, 10,000 is the balance. Here this is the side which is shorter, 10,000. This is known as debit balance, and this is known as credit balance. Okay, whenever you are balancing any ledger, the balancing figure is always written on the side which is shorter, and it is always known by the side which is higher. So this is higher, right? I mean, debit is higher, so this is debit balance. This is here, credit is higher, so this is a credit balance. Okay, so closing balance, when you're recording, closing balance is always known by the side which is higher. Okay, now this will become opening debit balance next period. This will become opening credit balance in the next period. Now we have 3 type of ledgers: real, personal, nominal. During the year we can balance it, but at the end of the year only real and personal accounts are balanced. Nominal accounts are not balanced at the end of the year. Nominal accounts are generally transferred to trading or P&L account, because all purchase, sales, right, all these accounts we transfer. But at the end, at middle of the year, right, when let's say you're closing it for the temporary purpose or for finding out some information. Say for example, I started my business in January, and entire month of January I was doing business. February half done. Now I want to know how much total purchases I have made till mid-February. So I'll just make a total of purchase account and I find a figure. Do I need to transfer it to what my trading P&L? Answer is no. Right. So I will still have a balance. That what is the balance in purchase account? It is, let's say, 5 lakh rupees. What is balance in sales account? Let's say 8 lakh rupees. So that is a balance. But when you are closing your books of account, when you are preparing your financial statement, you want to know the performance of your business, then all these nominal accounts we need to close and transfer it to what? Trading and P&L. Okay, so this we need to keep in mind. Okay, so right now we will be doing the normal ledgers questions and balancing stuff. Okay, so we have a question. Journalize the following transaction and post them into ledger and balance the accounts on 31st December. Okay, so we have to journalize this transaction as well as we have to post it. X started business with capital of 20,000. Okay, so what will be the journal entry? I'm not wasting time in journal entry. I'll just simply write it here for your reference, right, in rough, that if X is starting, in the books of X we are writing X is starting business, so entry will be what? Cash account debit to X, amount is 20,000. Okay, he purchased goods from Y on credit, so entry will be what? Purchase account debit to Y, amount 4,000. Okay, he paid cash to Y 20,000, so entry will be Y account debit to cash. Okay, this is the entry here. Okay, he sold goods to Z for 4,000. Z account debit to sales account, amount 4,000. Okay, then he received cash from Z 6,000. Okay, cash to Z 6,000. Now some of you might be wondering that, sir, why it is like that? Why we are receiving all this amount, right? I mean, 4,000 we have sold and we are receiving 6,000. Maybe Z is giving certain amount of advance towards the next purchase that he is going to make. He further purchased goods from Y 4,000. So purchase to Y. How much? 4,000. Okay. He paid cash to Y 2,000. So again entry will be what? Y account debit to cash 2,000. He further sold goods to Z. So entry will be what? Z account debit to sales, amount 4,000. And he received cash from Z. Cash account debit to Z account. How much? 2,000. Okay. Now, why I'm doing, I have just written the entries for your understanding. It's given that we should write it, right? But I don't want to waste much of time in drawing and all that. I want to focus on ledger preparation. That's why I have just recorded all these entry for reference. Okay. Now, if I'm just posting this, so I need to prepare how many ledgers? If I just write first, cash account, second, capital, right here, cash account, he started the business now, so here I'll write capital. It should not be X. Capital. Then we'll have purchase. Then we'll have Y account. Then fifth one will have sales. Sixth one will have Z. Right? Only the 6 accounts we have to prepare. So here I have prepared the ledgers. You can pause the video and write it. So here I'll write cash account, capital account. Then here we'll write purchase account. Here we'll write Y account. Here I will have sales account. And here I will have Z account. Okay, Z account. Now you can write here in the books of X. Okay, now one by one we post it. Now here, thus for reference, I have prepared JF column, but otherwise we do not prepare this JF column anywhere. Okay, because 99% cases they will not give you reference of journal folio, ledger folio and all that. Okay. So now this is on 31st December. So all this transaction, I'm assuming it is for the month of December. So I'll write December here, right here, December. They have not given the year. So I'll just keep it like that. December. Okay. Now first transaction. Cash account debit to capital. So here, cash account debit with how much? 10,000, right? 20,000. Date first to capital. Okay. Now I'll go to capital account. December 1st. Credit is how much? 20 and by cash. Okay. Then what is the second here? He purchased goods from Y on credit 4,000. So purchase account debit to Y. Let us go to purchase account first. Purchase account date 2. Purchase account debit by how much? 4,000. Which account to be created? To Y account. You can write to Y account, right? Journal folio, we will not be considering it, right? Because nowhere they have given the information. Now Y, date 2 by purchase account. This entry is coming from purchase account. How much? 4,000. Okay. Then here we have he paid to Y cash 2,000. So Y account is debit to cash, right? So Y account debit here third, and it is going to cash. How much? 2,000. So in cash I will write third by Y. How much? 2,000 rupees. Then fourth one, he sold goods to Z for 4,000. Z account debit to sales 4,000 on fourth. So on fourth, Z account debit to sales 4,000. And here on fourth by Z. How much? 4,000. We are getting it from Z, right? Okay. Then he received cash from Z 6,000. So cash to Z. Fifth one to cash. Sorry, in cash to Z. We are receiving it from Z, right? So to Z, how much? 6,000. And in Z we will go fifth one by cash 6,000. Now sixth one, he further purchased goods from Z. Sorry, Y. 4,000. Purchased to Y. Same to same entry. Only date has changed. Date is 6th. Yeah. So 6th. Purchase account debit to Y account. Amount 4,000 rupees. Here 6th by purchase how much? 4,000. Okay. Then he paid cash to Y 2,000. Again he is paying 2,000 rupees cash. 7th. So Y account debit to cash. Again 2,000. And cash here 7th by Y 2,000. Then he sold goods to Z for 4,000 on 8th. Z account debit on 8th to sales. It's 4,000. 4,000 rupees. And here sales on 8 by Z. How much? 4,000. Okay. Then what next? We are receiving cash from Z, 2,000. Cash account debit to Z, 2,000. 9 to Z, 9,000. And here Z by cash 2,000. Over. Now we do not know when the accounting year is ending, right? We are just supposed to balance the books on 31st of December. So what I'll write here, Here, which side the total is more? So if you check, debit total is more, right? Debit side total is more. So if I just do totaling here, 20 plus 6 plus 9, 35,000 debit total. Okay. And here on 31st, by balance carried downward will be how much? 31. Correct? This is which balance? It is a debit balance because debit side is more. Okay, here if I just do it, I hope you don't need a calculator for this one. 20,000, 20,000. And here 31st December by balance carried downward 20. This is which balance? Credit balance. No doubt I'm recording it on a debit side, but closing balance is recorded on a side which is shorter and it is known by the side which is higher. Purchases. For purchases, again, I don't need a calculator. Simple, I can write 4 plus 4 here, 8,000. 8,000. Okay. Here, 31st by, still I am writing by balance carried downward 8,000. This is, you can say, a summary of the month of December. So we have totally purchased goods for 8,000. If this is the year end, then I could have transferred this to trading, by trading account like that. Here, Y account. Y account credit side total is more, 8,000. And here, if I write 8,000, then on 31st by balance carried downward will be only 4,000. Okay. Sales. Sales account. Sales account also I have total here 8,000. Okay. And 31st by balance carried downward 8,000. This is which balance? Credit balance. Okay. And now here 8,000, 8,000. No balance. It's balancing itself, right? It is matching. So no balance. So this is how we do it for. This was your question for ledger. The following data is available, given by Mr. S. Okay, so the entire data is for Mr. S. So we have to draw the ledger in the books of S. The owner, with a request to compile only the two personal accounts of Mr. H and R. Okay, so in this given transaction, we can be having multiple accounts involved, right? Cash, bank, purchase, sale, right, etc., etc., discount, right, rebate, bad debts, anything. But they are telling that you focus on only two accounts. So we don't have to give the second effect which is attached with H and R account. So we have to focus only and only the transaction impacting H and R account, and only single effect we have to give. Second effect, they are not asking us to prepare the ledger. For the month of April 15. Okay. So we have to prepare two ledgers, right? S and H. H and R. Okay. So here I can write in the books of Mr. H, sorry, S and H account, and here R account. Okay. And this is for April 2015. So we can write here 2015 April. April. Okay. Let us check it. First, Mr. S owes to R 15,000. Okay, so Mr. S is owing to R. So it's a liability, right? Liability will have a credit balance. So in the books of S, R account, 1st April by balance brought downward amount is 15,000. Okay. And Mr. H owes to S 20. So Mr. H is owing to us, Mr. S, 20,000. Okay. So it's receivable for us. Yes. So first, to balance brought downward 20,000. Okay. Then 4th April. R sold goods worth rupees 60,000 at 10% trade discount to S. Now we don't have to think from the perspective of R. We have to think from the point of view of S. Now R has sold it. That means S has purchased it. Okay, 60,000 rupees goods, 10% discount. So it's obviously 60,000 minus 10%. So it's 54,000 net. Okay, so 54,000 is the amount that we need to pay. Or rather here it is purchase on credit. So entry will be what? Purchase account debit to R. Okay, so 4th April will go to R account by purchase 54, 60,000 minus 10%. Okay, then Mr. S sold goods to H at a price of 30,000. Okay, so H account debit to sales. What is the date? 5th. To sales. 30,000. On 17, record a purchase of 25,000 net from R, which were sold to H at a profit of 15,000. Okay, so there are two actually adjustments. One is, excuse me, sorry, 25,000 rupees we are purchasing from R. Okay, 17th. So first we will record here by purchase account debit to R, 25,000. Okay, and then same date, 17th, to sales. Now it is actually sold at a profit of 15,000. Okay, so that means we must have sold these particular goods to H. Sometimes it happens like that I have, let's say you go to a particular shop and you demand for certain product and they'll be like, sir, it's not with me, but I can arrange it for you. If you confirm that you will purchase it, this will be the price, then I'll arrange it for you. Okay, so if you agree that, okay, I am comfortable with the this particular price, they will contact the dealer and buy exclusively for you. Maybe that kind of case might have happened. They purchase it for 25 and they are selling it for 40 to H. Okay. Now, 18th, Mr. S rejected 10% of R's goods of 4th April. Okay, so in 4th April, we purchased total goods at 54. 10% goods we are rejecting. So we are sending it back. If this is purchase, this will be what? My purchase return. Supplier account debit to purchase return, 18th. To purchase return. It will be 5,400. Out of 54,000, 10% goods rejected. Okay. Now, 19th, Mr. S issued a cash memo. Now here you have to focus on this cash memo of 10,000 to H, who came personally for this consignment of goods urgently needed by him. What we will do? No entry in H's account, because here the entry will be what? Cash to sales. But sir, how do you know it is a cash? See here, the focus is on cash memo. Maybe let's say a situation where Mr. H is owing, no doubt. See, if you see, Mr. H is owing almost 50 plus 40, 90,000. And he immediately comes in, sir, I need these goods on urgent basis. And maybe like we told him, see, if you need it on urgent basis, pay in cash. Forget about the previous due. And he agreed for that. Now, if I'm giving goods to the same party, but for cash, when Gandhi Bapu comes, nobody else will come. So cash account debit to what? Sales account, cash to sales. So even though I'm selling it to H, this particular entry will not affect, right? Here I'm writing no entry. Do not think like that we will not pass entry in the books. The entry will be there, but this entry will not affect specifically H account which we are preparing. It will affect cash and sales account. So in particular question, it is not going to affect. So in that context, I'm using word no entry. Otherwise, you can write no effect. Okay, here we can write no effect in H account. Okay. 22. Mr. H cleared half his total dues to S, enjoying half% cash discount, and of the payment received 20,000 by way of check. Okay, so he told that 50% on 22nd, 50% of dues he want to clear. And on that 50% due what he's clearing, we are giving him half% cash discount. So whatever after cash discount the amount comes, for that 20,000 is giving by check. What about remaining amount? Has to be by cash. Okay, so if you check here, H is owing us how much? 20 plus 30 plus 40. 20, 30, 50 plus 40, 90,000. Okay, so here if we write here that dues settled 90,000 into 50%. I hope you got 90,000, 20, 30, 40, right? So 45,000. Okay. Now out of that, we are having discount half percent. So 45,000 into 0.5%, roughly 225. So balance will be what? Payment. 44,775. Here, by check, they have told 20. So here, my BF is cash. Balancing figure, 24,775. So what will be the journal entry? Debit what comes in? Cash. Check. Cash account debit, bank account debit all the expenses. Credit the giver to H. Okay, and all these things are happening when? On 22nd. Okay. So 22nd, I'll write here. By bank 20, by cash 24,775, yeah, and by discount allowed 225. Okay, so in entire question this was a kind of, you can say, good adjustment. This is also one good adjustment where students may make mistake. Now 26, R's total due less 10,000 held back were cleared by check, enjoying a cash discount of 1,000 on payment made. Okay, so here whatever we are owing to R, from the 10,000 we are keeping aside, right? 10,000 we are holding, that we are not paying it. So remaining amount we are paying. On that 1,000 is discount. So remaining amount I must have paid by check. What is R's due? If we go to R's account here, so 15,000 plus 54 plus 25 minus 5,400. So right now we are owing him 88,600. But are we paying full 88,600? Answer is no. 10,000 we are holding back. Okay. So how much we are clearing? How much we are settling? 78,600. But are we paying 78,600? No. 1,000 discount and remaining is what? Paid. Repaid by check. 26. So can I write on 26 like this? To bank 77,600 and to discount received 1,000. Then close H account to record the fact that all but 5, this but means except 5,000 was cleared by him by a check because he was declared bankrupt. Okay, so whatever balance is there in H account, everything is received by check, right? Only 5,000 is not received, and this 5,000 I will treat as what? Bad debts. Okay, so here H account 50% cleared, right? If you just check here, 20, 30 plus 40 minus 20 minus 24,775 minus 225. So total amount is owing us is 45,000. He's not paying 5. So it means he's paying how much? 40 on 29th. So on 29th, by bank 40 and by bad debts 5,000. Okay. And balance our account. Now obviously there is no transaction. So on 30th, I should have to balance carried down what 10,000 because we held it back. Or even if you don't remember all this thing, right? Simple maths we know 15,000 plus 54 plus 25. So 94,000 is the total. So I'll put it here 94,000 and minus 5,400 minus 77,600 minus 1,000. So automatically you'll get what 10,000 here. 20, 30, 50 plus 40, 90,000, and it should match because now there cannot be any balance right left after this valid entry. So this was your simple question, and this kind of question they can ask from ledger for let's say 5-6 months. Okay.